Hi, I'm Jack Mintz, and this is the School of Public Policy. Today, I'm very pleased to release a report we have done on the Global Tax Competitiveness Ranking for the year 2012. What we measure are corporate income taxes, sales taxes and capital purchases, and other capital-related taxes, and look at their impact on the rate of return earned on what are called marginal projects or for investment that is done at the margin. That's related to competitiveness because investment is very mobile. Capital can be easily shifted from one country to another, and that's why we focus on capital particularly when we look at tax competitiveness. This is a good news report for Canada. In fact, we've undertaken a large number of reforms since the year 2000. We've cut the corporate income tax rate from being one of the highest amongst OECD countries in the year 2000, 43%, and today it is now 26.1%. We've also eliminated capital taxes that were paid by our non-financial companies particularly. And we have also removed a lot of sales taxes on capital purchases, as many provinces, especially Ontario and Quebec, and most of the Atlantic provinces have harmonized their provincial sales tax with the federal GST, removing a lot of taxes on capital inputs. When you put it all together, Canada has gone from having the highest tax burden on investment in OECD countries in the year 2000 to the middle of the pack when it comes to looking at 90 countries and the OECD. As a result, Canada now has the most tax competitive regime amongst all G7 countries. And that is a remarkable record compared to where we were in the year 2000. There are three additional findings that I think are of interest to Canadians. When you actually look at corporate tax revenues, despite the significant reduction in corporate rates, corporate tax revenues have stayed about the same as a share of GDP in Canada. So therefore, the corporate rate reductions have not had much impact on corporate tax revenues. And second, Canadian investment actually has improved since the year 2000 when we've engaged in this significant tax reform for the business community, and in fact much better than the performance that we saw in the 1990s. And this is actually confirmed by a number of studies that have actually shown that the taxes have helped generate more capital investment in Canada. And third, when you look at the numbers, you see United States, at least amongst the OECD countries, has the most uncompetitive tax structure in the world. This is a very serious problem for the United States. Now, we might think in Canada, that's terrific because that's causing many US businesses to look at Canada to set up shop. It's also causing many businesses to shift profits into Canada, which is one of the reasons why we haven't lost much revenue with our rate cuts. However, we have to remember that US is our most important trading partner. And if they have difficulty attracting investment and growing, that will affect us through our export markets. And finally, this report has an important warning to Ontario and to any politician that advocates raising corporate income tax rates. When you look at what Ontario has done, it has decided not to drop its legislated corporate rates from 11.5% to 10% by next year. First of all, for many businesses, that really was a tax increase because they had already incorporated the lower rate in their investment plans and in their accounting statements. So by foregoing the rate reduction, Ontario actually raised the legislated rate in 2013, and that has an impact on businesses in terms of their investment decisions and the amount of profits they're going to earn in Ontario. Instead of giving up its rate reduction, it should have gone ahead with it. But it could have, if it wanted more revenues, get rid of some of the capital tax expenditures that are existing in the current system. A number of incentives that have very questionable impacts in terms of actual more investment, but actually erode revenues that the government does get. I'm Jack Mintz. This is the School of Public Policy. Thanks very much for watching.